Hello, welcome to the European Open briefing for Wednesday, May the 10th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So it is a rather quiet start to the day. The main headlines this morning have been around that decision by President Trump to fire the FBI director in the United States. That actually caused the dollar to fall back briefly, and the yen also shot up. We also have some risk aversion surrounding the threat of North Korea conducting another nuclear test. So that we did see some risk aversion in Asian trading earlier today, but that has receded now. In other currencies, the Aussie seems to be struggling still near 4 months lows. We had producer prices out of China this morning, which showed that raw material prices in China fell in April, and that's been negative for the Aussie. Although we are seeing higher iron ore prices today, so that has provided some boost to the Australian dollar. The pound, though, it's doing rather well. It's moving back towards the 1.30 level, and that's on those expectations that the Conservative Party will win a big majority at next month's general election in the UK. But let's begin with the dollar-yen pair. We can see the dollar has been steadily rising over the past couple of days. It rose to a 2-month high of 114.32 yesterday, before falling back after that announcement came in that President Trump unexpectedly fired the FBI Director James Comey. The reason for that decision, according to the White House, was due to Comey's handling of Hillary Clinton's email scandal. But most critics suggest that that decision is probably more to do with the fact that the FBI is investigating possible collusion of Trump's election campaign with Russian officials, and that could cause some political upset in the US over the coming weeks or months, well, it's unlikely it will affect the decision whether Congress would approve tax cuts later this year, but still it has caused some uncertainty. But the focus, though, is more likely to be on the Fed regarding the US. Here in the chart in orange, we can see the yield on US Treasury yields. They actually rose to a 5.5-week high yesterday of 2.416%. We're seeing growing expectations within the futures markets that the Fed will raise rates by another quarter of basis points in June, and that increase in treasury yields caused gold prices to drop to 2 months lows of 1,214 yesterday. Gold is a little bit higher this morning, around 1,220. There's been several Fed officials speaking in recent days. Most of them have been supportive of further rate hikes this year. We had the Boston Fed President, or Eric Rosengren, yesterday saying that he was concerned about the unemployment rate falling further. He said it's now fallen to below its natural equilibrium, and that could potentially lead to the US economy to overheat. Dallas Fed President Kaplan, he also spoke yesterday. He still expects rates to go up 3 times this year, but he was a little bit more dovish. He did say that the Fed should be careful not to raise rates too rapidly, as it would slow down GDP growth if the Fed did that. And moving to the yen now against the euro and the pound. Here in the chart, we can see this at the same time as that announcement came in of the FBI head being fired by President Trump. We saw the euro and the pound fall against the yen before recovering again. And as mentioned, North Korea is another dark cloud hanging over the markets, as there is talk that it is preparing a 6th nuclear test. But there is some stability from the fact that South Koreans elected a new president, the liberal Moon Jae-in. He's not unlike the Conservative Party, which was President Park, he's more willing to have discussions with the North Korean leader. So that may be a reason for less tension in the region. We also had the Bank of Japan's summary of opinions for the April 26-27 meeting being published this morning. Of course, at the April meeting, the Bank of Japan was much more upbeat about the economy. But the minutes, at least the summary of the minutes, they suggest that the bank is unlikely to withdraw monetary policy stimulus anytime soon, given the fact that there are still several uncertainties from overseas developments as well as the geopolitical risks that could weigh on the Japanese economy. And we're seeing the yen at 4-month lows against the pound at 148 and a 1-year low against the euro at 124. Let's have a quick look at the Aussie now. We had producer prices out of China. They rose by 6.4% year on year. That's down from 6.9% in March, and it's below. That's down from 7.6% in March, and it compares with expectations of 6.9%. It was the first time in months that we saw raw material prices fall in China in April, and that suggests that the reflation in China may have peaked, and that could be negative for the Aussie, which exports resources to China. The Aussie hit a 4-month low yesterday of just about 0.73. We are seeing a bit of a rebound in iron ore prices. That's helping the Aussie move back to about 0.7360. But the Chinese data could be a possible cause of concern. Although headline inflation, it did come in slightly above expectations at 1.2% in April. And let's have a quick look at the pound, because we're seeing the pound moving closer to breaking the 1.30 level. And since that announcement of a snap general election on June the 8th, the pound has been rather bullish. And that's because the Conservative Party are expected to gain a big majority, and that would potentially make it easier for the UK to discuss the Brexit terms with the EU. And the latest polls, although the Conservative lead has fallen slightly, they still hold a very strong majority, and up until that big majority holds, the pound, that should give a good support to the pound. Also, the Bank of England starts its 2-day monetary policy meeting today. Investors will be on the lookout for possible more hawkish members within the Bank of England, given recently that 1 or 2 MPC members have voiced concern about inflation. And tomorrow we're also going to have industrial and manufacturing output and trade data, so it's going to be a big day for sterling on Thursday. But today it's going to be a rather quiet economic calendar day. We had French industrial output data earlier today that came in above expectations. But the main focus will be on ECB President Mario Draghi. He's due to give a speech in the Dutch Parliament where he may signal a possible shift in the ECB's outlook to a more neutral one. That's it from me. Thank you very much for watching, and have a great day.